afternoon, everyone. Welcome to today's session on how regional entrepreneurs can capitalise on the changes caused by COVID-19 and attract interest from investors, perhaps usually focused on the capital. I'm James Hurley. I'm enterprise editor at the Times newspaper. The things I write about include private companies, entrepreneurs, and investment. And today we're going to be talking about the prospects for levelling the playing field when it comes to pitching for investment. First of all, I just want to thank our hosts, SFC Capital, very much for convening us all today. We've got a fantastic panel joining us. So first of all, Rachel Smith, who's co-founder of Lifefyle, a life organising app, something I'm certainly going to be downloading. Sue Barnard, who's Senior Manager at British Business Bank, the state economic development organisation whose aims include levelling up regional access to finance. Lauren Nicholson, Programme Lead, Founders Network at TechNation, that I'm sure will be familiar to all of the audience, of course, provides a support network for technology entrepreneurs. And last but certainly not least, Rohala Gassimi, Lead Investment Manager at our hosts SFC Capital, which I believe is one of Britain's most active early stage investment firms. Just to provide a little bit of context to our conversation, I was doing a bit of research before we got started, and I guess just to get the numbers that confirm what we all know in terms of the bias towards London in terms of equity investment. A government report published last year found that between 2011 and 2017, London and the South East and the East of England regions received 67% of all equity deals and 75% of all invested funds in the UK. The concentration in London has increased over time, and the highest average annual growth rate in equity investments, and London and the South East received higher proportions of equity investments in the UK than would be expected based on their share of high growth businesses and SMEs. Today, we'll be looking at to what extent the fallout from the pandemic has provided the opportunity for startups outside the capital to seize and secure funding that has typically been easier to access for London-based businesses. And if indeed there is a rebalancing going on, how might that be maintained? We've got a few audience polls throughout today's session to find out what you all think. You'll see the questions pop up, and I'm promised that it's very easy to vote. We've got about an hour penciled in for the sessions. There's plenty of opportunities for you to ask questions to one or more of our panelists. Rather than wait until the end of the session, I'm hoping to put your questions to the panel throughout. So please do drop them into the Q&A box on Zoom as inspiration strikes you, and we'll get to as many of them as we can. I'm told today's discussion is being recorded, and the recording will be shared with all of you afterwards. So we'll all be on our best behaviour, hoping that we don't get any online deliveries, knocks at the doors, or cats and dogs interrupting. Let's see how we go. Now, before I introduce our panel, why don't we get started with our first poll of the day? Could we have our first poll question up? Do you think investors are more willing to meet regional entrepreneurs than before? What's your experience been? Yes or no? Please vote now. And please do put the results up when it comes in. Oh, that's very encouraging. 79% of you think that investors are more willing to meet regional entrepreneurs than before the crisis. So I think that provides a great starting point for our discussion. So I introduced the panel very briefly a moment ago, but before I get your reaction to that first poll, guys, I'll briefly give you a little bit more detail on each of them. So Rachel, who I mentioned, over her career as a solution designer and project manager, Rachel's helped shape more than 20 businesses, ranging from startups to global brands across 7 different countries. She founded Lifefyle in 2017. Its platform helps organise individuals' and families' life admin by storing documents and tasks in one place, and its head office is in Anglesey. Sue Barnard is responsible for delivering the Northern Powerhouse Investment Fund at the British Business Bank. Sue's an expert in supporting regional-based founders and creating channels for funding to reach those businesses, so exactly the kind of person we want to be hearing from today. Lauren Nicholson established TechNation's Founders Network, a networking platform for early stage founders that she grew from scratch to more than 800 entrepreneurs in 1 year. She's also responsible for running programs for early stage businesses at TechNation. And Rohala leads many of SFC Capital's investments into regional companies, focusing on the Seed Enterprise Investment Scheme and Enterprise Investment Scheme eligible companies. Rohala helps startups develop in their early stages, providing advice and support at this critical period of their journey. Now, we saw that poll that had some encouraging results where you guys had the feeling that the investors' appetite for meeting regional entrepreneurs has grown since the start of the crisis. Rachel, why don't we start off with you? What's your experience of fundraising been? Do you think historically you've struggled for attention, and are investors missing a trick by disproportionately focusing on the capital?
Sorry, just unmute myself. Thanks, James, for the introduction and for the question. It's a good question, and actually it's a really interesting question to answer from a Lifefyle perspective, because as a tech business, actually when we established the business, we felt that we had to have a presence in London to be seen as credible in tech space. So while we've always had a kind of nearshore development operation up in North Wales, we originally based ourselves in London, feeling that we needed to have access to the Silicon Roundabout, access to the network, and that's where the investors were. And it's only through our experience of actually raising funding under SEIS, around which we did relatively slowly actually, and brought our funds in tranches, but closed in H1 of this year. It's only through that experience that we realized that investors, a lot of the investors we were talking to, saw our kind of Welsh element not only as a benefit that we did in terms of being able to afford really good quality resource that we couldn't afford in a much more competitive London space, but also they saw it as a differentiator, they saw it as a strength and an opportunity to access different funds. So it's actually through our experience of raising funding that we took the decision to relocate the whole business up to North Wales and up to Anglesey. So it's been really interesting from that perspective, but also in terms of your question about share of voice and kind of getting attention, for sure, it's not easy to get attention as a regional startup in the London space, because the capital is so busy and so competitive. And I understand, I totally get it from the investor's point of view. Why do you need to look further when you've got enough people on your doorstep hammering your door down? And also, you know, with London attracts most foreign investment, of course. So it's probably quite galling if foreign investors are coming in and making investments, taking equity, creating unicorns on your patch. So I do understand, but yes, it's hard to get share of voice actually as a London tech startup in London, but also as a regional startup, it is hard to get that share of voice in London, but much more straightforward to get a share of voice in the regional market.
Thank you, Rachel. That's really interesting. And Rahala, I just wanted to ask you to follow up on that. We heard Rachel talking there about share of voice and getting seen and heard. To what extent do you think non-London-based entrepreneurs have been disadvantaged by this focus on the capital that investors often have? Are you just on mute, right, Rahala?
Thanks. Thank you, James, for the question. I mean, generally, the pandemic has had a big sort of effect on how we conduct business in general, and particularly in case of like sort of deal origination, it has surprisingly had a sort of positive impact. So generally, there has always been this geographical bias towards London-based companies, and I personally don't think there was ever a time when investors would specifically want to invest in London-based startups rather than regional ones. Investors are always looking for good opportunities regardless of the location where you're based, whether you're in London or Wales. As long as you have a good proposition, you have a good team and validation, I'm sure investors are happy to take a look. However, this geographical bias has been sort of caused by a variety of reasons. As you said, the disadvantage that regional companies have is, for example, 65% of accelerators, incubators, startup hubs are all based here in London. Majority of the investors are based in London. Most funds are based in London. Close to 60% of angel investors are based in London. So what this meant is that most pitching events happen in London. Most demo days happen in London. Most startup meetups happen in London. And more specifically, not just anywhere in London, but central London. And as you know, fundraising is all about networking, is all about building the relationship. So if your startup was not based in London, you're essentially missing out on all these events, on all this, being part of this community and the ecosystem, which is not ideal. And similarly, as I mentioned, most investors are based here in London. So for an investor to sort of be able to attend regional events, that takes a bit of commitment. So it means that most investors are not able to attend regional events regularly, and that in sort of missing out on those great opportunities. And all in all, what this has meant is that I think one of the statistics was that more than, if you're based in London, you have more than 50% chance of getting funding. And around 70% of all investments happened sort of in London-based companies. But sort of as the pandemic has kind of come in, it's kind of changed everything. Now everything is more virtual, so investors like us can attend more events, which is great. And the more events we attend, the more pitching events, demo days we see, it means that we have more exposure to regional companies, which hopefully kind of will level up the playing field a little bit more. So as an example, for example, last week in the morning, I was at an event for Leicester startups. And then just an hour later, I was in an event for a Newcastle-based startup, which again, pre-pandemic, this would not have been possible. But generally speaking, to answer your question, yes, I think historically there's been a benefit and advantage to being a London-based startups at this point. And also to add to that, in terms of the sort of the exposure, the advantage kind of being leveled up is that now that you've got the commute out of the picture, you're able to do a lot more meetings, especially first meetings that we do. These meetings usually last 20 to 30 minutes. And usually we either had to travel to the region to meet the company for that short meeting, or get the company, for example, a Scottish company, to come down to London to meet us only for 20 or 30 minutes, which sometimes wouldn't be fair, you know, to incur all the cost for just a short meeting. And if you did decide to previously do a video call, for example, rather than coming in on a face-to-face meeting, you naturally had a bit of a disadvantage to the ones who are doing face-to-face meeting. And that's, I think, just normal. It was with everybody. But now that you've taken the commute out, for example, we've now able to sort of ramp up our sort of first meeting. We're doing on average about 80 first meetings per month, which is really great. And again, this kind of has helped to level it a little bit more and bring a bit more advantage to sort of regional companies, because now that you've got all those out, companies can be sort of judged by their merits rather than the sort of those initial relationship building that you've got.
Really interesting. And Sue, could you just tell us a little bit about the British Business Bank's work in this area? So obviously this was an area of focus for the organisation anyway, to try and improve access to equity finance for regional entrepreneurs. Pre-crisis, what had you been doing to level the playing field, and how successful do you think you were?
Yeah, so obviously the bank was created in 2014, and a few years ago we'd already looked at levelling up, and we'd put some sort of objectives in place to look at accessing and enabling entrepreneurs to access more finance outside of the city. So we have a number of initiatives that we currently run. Obviously, I work on the Northern Powerhouse Investment Fund, which we launched in 2017. And I'm pleased to say from that fund, it's a £404 million fund. And we've invested 200 million into regional entrepreneurs just on that fund alone. And that, you know, there's lots of other funds that British Business Bank backs, as is SFC Capital for Regional Angels Programme. So in the last few years, we've done quite a lot of work around working with more fund managers, more finance lenders to get more investments into regional funds and regional SMEs. And it's working quite well at the moment. And I think what we're doing is we're actually showcasing some fantastic businesses in the north. And we do have other regional funds, you know, like the Midlands Engine, Cornwall and Scilly Isles. So it's not just about Northern Powerhouse Investment Fund, but from that fund alone, we've invested in 700 SMEs across the Northern Powerhouse region, a number through equity. And as I said, it's really showcasing and showing exactly, you know, that's some fantastic businesses to invest in. And as the panel say, it's a lot more easier now because you've not got that travel. You can sort of pitch anywhere, really, anywhere in the world now. It doesn't really matter. So that there's sort of a more wider network for you to sort of approach without actually leaving your location, which I think is a very attractive proposition for investors at the moment.
Fantastic. And Lauren, could I just get your view on this? I mean, are you picking up from your networks that entrepreneurs are reporting that it's easier to access investors like Rahala? Rahala described there how he's now able to attend, you know, multiple regional pitching events, for example, in one day. Is your network of entrepreneurs telling you that they're finding it easier to get their foot in the door with investors because they can pitch virtually?
Yeah, definitely. So Founders Network's been a virtual program now for since about April 2018. So we stopped doing in-person events because we are a national network. And what's been actually really interesting over the course of the pandemic is we've think we've now grown to about 2,000 companies within the network from across the UK. So obviously just that peer learning and knowledge sharing is just, you know, an amazing place to be right now. And one of the things that has come out of that is the fact that having those initial conversations with VCs and also business angels is starting to really pick up. It goes back to what Rahala was saying about, as long as you've got, you know, a really good offering, you're starting to show the traction and the metrics, you know, investors are wanting to speak to our members. And we've actually been running since about February of this year in light of the pandemic, and Ask Me Anything with a VC series, where we basically bring in a VC from various VC houses to just come in and just talk to our founders over a Zoom webinar, and they're able to sort of, you know, ask them the questions that potentially they wouldn't have been able to ask them in a face-to-face setting. And that's been a really productive sort of like source of leads for the VCs that we've had on the panel. And actually we're starting to get our founders are going through sort of that process and starting to get investments. And we've also collaborated with Playfair Capital to launch the female founder office hours. And over the course of the 2 that we've done virtually, I think we've done over like 1,600 office hour sessions among something like 800 female founders, and just from that three investments have come out of that. So yeah, I definitely think there is now a shift in the right direction of opening up funding for you know, founders from across the country, not just in London.
That's great, thank you. And why don't we have our second poll now? So if we could put the second poll question up. What are the biggest barriers stopping regional businesses accessing funding? I guess the context of this is probably pre-crisis, really, isn't it? Is it remoteness from where investors are based, lack of knowledge of where to find funding, London bias from investors, or you don't believe there are any significant barriers actually, and it's all a level playing field? Please vote. I'd be interested to see if anyone thinks it's a completely level playing field. Well, we do have 1 in 10 that thinks it is a completely level playing field, so that's fascinating. It's level pegging between a lack of knowledge of where to find funding and London bias from investors, and remoteness from where investors are based is perhaps surprisingly low in the rankings. Rahala, what do you make of those answers?
Yeah, no, it kind of falls in line with what we discussed earlier, and I think that's definitely a case based on what I explained to you earlier. That for a variety of factors, naturally there's been a bit more focus on investing in London. But for example, just looking at our own stats at SFC, so until for the past few years, on average, we had about 40% of our deals coming from the regions. But towards the end of last year, we actually put a target for ourselves to increase that number to about 70%, which during the pandemic, we've actually managed to do quite well. We've surpassed that number actually. And this is all because of what we discussed earlier, you know, so you've taken those barriers out. We have more access to startups in the region, and the startups in the region have more access to investors. I mean, Lauren mentioned that there are now more workshops happening where investors are, because again, there is no commute. It's much easier for investors to attend workshops. You know, we've done many of them, we do. And again, it just sort of puts us in front of startups and puts the startups in front of us, which will increase naturally their chance of getting funding.
And just quickly to follow up on that, Rahala, you spoke a moment ago about how, you know, the pandemic is changing things like deal origination and your ability to see startups from places outside London, for example. What about due diligence? How do you go about that if you're not meeting a company physically? Does that change at all, not being able to see them in the eye, or does it look them in the eye? Does it not matter because you can just receive all the documents virtually and do desk-based research, for example?
I mean, with regards to is that we've never met in person, I can assure that none of us thought it was going to work. The first lockdown came into effect in March. That's one of the busiest times of the year for funds like us. You know, it's closer towards the end of the tax year. So we were actually in the middle of closing about 30 deals. But at SFC, obviously, as you mentioned, we're the most active seed investors in the UK. We do over 50 deals per year. So naturally, we do have a sort of a streamlined and standardized process from our first meeting all the way through to sort of the due diligence and the legal documentation. We did have the initial challenge of adopting it virtually, but since the beginning of the pandemic, we've closed over 23 deals, and now we're in the process of closing another 20 deals before the end of the year. And most of these companies we have not met in person. But obviously, it is important to meet founders in person. I think that's something that will have post-pandemic. We will be able to meet people in like face-to-face as well, and that would definitely help with the due diligence. But I think based on what we've seen, it is actually possible to do as long as the companies are sort of prepared for it, because now that you've taken this face-to-face element out of it, communication is actually ever more important. The founders need to be able to communicate so much better with investors, be a bit more responsive, be prepared, a bit more prepared on the due diligence side of things. And, once, if everything is in place, things can get done actually fairly quickly. We've had deals in the past few months that we've managed to close within 2 weeks only, which is extremely good news for startups, looking for funding, that things can be happening that fast. But again, everything is now virtual, so this geographical bias has been taken out of the picture, which is great for founders. And yes, we do miss this sort of a step in the way of actually meeting founders face to face, which hopefully will be sort of addressed post-pandemic, once the restrictions are lifted. I think as part of the due diligence, we would like to meet the founders in person. But so far, we've managed to sort of run through the due diligence process fairly seamless during the pandemic.
And Rachel, moving to you, have you tried to raise any money or even have just initial investor conversations during the crisis at all?
Yeah, absolutely. We are starting our EIS fundraising round now at the moment, and it's just to respond to Rahala, we miss you guys too. It's really nice to meet the investors in person as well, and actually, look people in the whites of the eye. But what we are finding, as I think everyone has alluded to, is that because we're now regionally based, but also mainly because of the pandemic, because everyone is online, it is seemingly easier to get that first meeting and make that connection with people. It's the travel and the diary management is restricted, but it's made it easier. So yes, there's differences, but there's also similarities. So differences, I mentioned before, London is so competitive, but you mentioned, James, yourself, the statistics. The deals in London are so much bigger that it's often worth the fight. So we're finding the regional conversations, the pots may be a bit smaller, but there's so much variety of grant funding available, and the networks are really tight. So once you've spoken to somebody, then they will invariably introduce you to somebody else. So we are finding the kind of availability for first meetings in terms of getting them in the diary, but also people being willing to just have that conversation is refreshingly easier. Similarities, again, as Rahada has mentioned, and so, you still have to have a damn good idea. You still have to have a damn good business plan that stacks up, and you have to know your numbers. But yeah, so I think there are definitely differences and positive differences in the way that this year has played out.
And thank you. And I wanted to bring in an audience question now. Lewis Stringer has asked a good question. Thank you, Lewis. Are there particular regions in England that are more difficult to invest in than others? And if so, why? So I guess we could broaden that slightly into are there particular regions in England that are more difficult to invest in or indeed raise in than others? And if so, why? Why don't we start with you, Sue? You've got a good overview of the regional landscape. But what do you think to Lewis's question?
Yeah, well, yeah, and thanks, Lewis, for that. I mean, when we look at obviously the UK, there are particular regions which have been difficult previously to invest in. But I think what it comes back to is your previous poll question, which was around the barriers and understanding where to go. I think a lot of SMEs and entrepreneurs don't know where to start because there is so much funding available. Like Rachel said, there's grants, there's loans, there's equity. And if you're an entrepreneur starting out, you sometimes don't understand where you need to go. So I think what it is, it's more of an educational piece for each of the regions to help their entrepreneurs and SMEs understand the access to finance ecosystem. And I think one of the things that I really push with the fund managers that I work with and our lending partners, I mean, if you just look at British Business Bank alone, we lend with 180 different lenders. So it's a big pool of funders to look at, and that's not excluding other funders in the private sector as well. But I think what we need to look at is working with people like SFC and other lenders and investors and say, if someone comes to you and it's not for you, then let's try and widen it out and help them potentially signpost them to someone else, because I get so much feedback from lenders and from fund managers, VCs, who say, well, we get 50 pitches a week. And it's sort of, well, if you're only doing 2 of them, what are you doing with the other 48? Why don't we try and make it a little bit more easier for the entrepreneur to, you know, help them navigate through that ecosystem? I think is something that all regions should do. And I think if we all work like that, hopefully everyone will get better access to finance going forward.
Thanks very much. And Lauren, what do you think to that? I mean, are there any entrepreneurs in your network from particular regions that you would say are particularly disadvantaged in terms of ability to access capital?
Yeah, I mean, it's a great question. I think it's one of those things as well. You also have to sort of like look at it holistically and sort of like how developed in terms of like a tech sector a region is. So obviously you've got like the hubs of, say, for example, like Cambridge and Oxford, Manchester, Leeds, and then you've got, say, more of like your smaller regions, which are sort of like up and coming, but they're no less fascinating than, say, some of the bigger tech hubs. So I think that it kind of, there is that thing of like, it does depend where you are still. However, the power of the internet, and in a way, one of the pluses of COVID has, at least to a certain extent, sort of level the playing field. I'm not going to say it's completely, because that would be a downright lie. But we're starting to see that investors are, you know, obviously looking further afield. I remember once talking to an investor who was based in Cambridge, and he was like, I will not do an investment 60 minutes outside travel time outside of Cambridge, because he said it's just not, you know, I can't support them in the way I would for someone within that 60-minute sort of travel time. And like now he's like, well, actually, I've completely changed my my stance on that, because I'm able to do it over things like Zoom and stuff like that. So I think it does depend on sort of like where that sort of like area or region was like pre-COVID in terms of its sort of like development of becoming a tech sector hub. And I just think that COVID is one of those things that's really sort of propelled like the advancement of that, and it is starting to level the playing field. But there is still work to be done.
I'm interested into what extent these changes that you guys are all describing are kind of here to stay, I suppose. Like, you know, let's say optimistically a vaccine is successful, as we hope it will be, and things begin to return to something resembling normality in, I don't know, the spring or the summer. Is the location of a business going to be less important than it was pre-pandemic? Might London's strength return? Actually, you know, we've seen people like Sequoia, the Silicon Valley venture capital firm, setting up in London. Might things creep back to normal, and we see that we see the regional disparity reasserting itself, I suppose? Rahala, what do you think?
I think obviously London, I don't think we can take London out of the equation anytime soon. You know, most investors are always going to be in London. You know, you got the professional, especially angel investors, which are more professional sort of individuals who have extra money to invest. Majority of them naturally are in the capital city. So I think London always will be a hub for investment. What the ecosystem probably needs to do is they need to take a big look at what worked and what didn't work, what needs to improve. And clearly certain things have worked. So virtual events, we've discussed it. I think everybody on the panel have mentioned that. So virtual events, virtual meetings, that's been great, both for investors because we can attend more things, we can see more startups, and on the startup side as well, it's been great. So I think there will be elements of what we're doing now that will stay and will be here for the future. However, I think there's always be, you know, we always will be go back to having, you know, a bunch of events in London and, you know, demo days in London, etc. Because I don't think those, I mentioned to you, like we got 65% of accelerators, incubators based here in London. So I doubt they will suddenly move and go away. But however, they might offer, which I've already had conversations with few incubators and accelerators, they're now thinking how they can deliver their program virtually. So someone, let's say, based in Manchester can easily join an accelerator in London without having to sort of bear the cost of moving down to London, thinking how they're going to sort of fund that period, etc. So I think, yeah, there will be a mix, but I doubt we can take London out of the equation because money here is in London. But the way that we're doing and the access that investors are getting to startups, I think is here to stay.
And Sue, what are your thoughts on that? Do you think that this, to what extent that we've had rebalancing during this period, is that here to stay? Can that be built on, or actually are we going to see London reasserting its strength in a few months' time?
I mean, from a British Business Bank point of view, we're going to try our best to achieve the objectives that we've set ourselves, which is to reduce the regional imbalances across the UK. So we are working tirelessly with a number of fund managers, with potential fund managers, to work with them to help them embed themselves outside of London and to do more investing outside of London as well. So we're going to try our best to work with partners, just to try and ensure that all businesses have the right access to finance options going forward. And I don't think we won't change that stance now. We've sort of made a commitment that we do realise that we have to do more outside of London, and I think the regional funds, as I touched on before, have demonstrated that we can do it. And we got another £100 million last week in the spending review to top up Northern Powerhouse Investment Fund, because we've demonstrated already that there's some fantastic businesses outside of London to invest in.
Thanks. We've got a really good audience question coming. It's anonymous, so I can't thank them, but thank you for whoever sent this one in. And it's following up from the question I just asked there. Do you think physical ecosystems are now a thing of the past? And do you think that will impact the sharing of knowledge between startups? I think that's a fantastic question, because the strength of cities has always been on the basis of a physical ecosystem and the power of networks. If we're to believe that the pandemic is leveling the playing field, I guess it's partly because it's disrupting that network, isn't it? Lauren, what do you think? Do you think physical ecosystems are going to be less important going forward because we can transfer knowledge virtually, and we don't need to get to know investors one-to-one in the way that we used to?
I think there'll be, in a way, a hybrid model. I don't think we can ever underestimate the power of actually speaking to people face to face. And I know from speaking to quite a few of our members, I think everyone's just really keen just to speak to an actual person in real life and not over Zoom anyway, irrespective of whether they're asking for investment or not. So I think there'll be a place for both. I think that what will end up happening is, and referring back to your earlier question in terms of will we end up going back to the way we operated, I think it's basically up to us. I think there's a place that where is it a way to use sort of the virtual tools that we've got to sort of initiate those conversations, and then actually the face-to-face sort of only occur when there's actually, say, a 50% plus chance that you are actually going to invest in this particular startup. So therefore it's worth both the VC and the entrepreneur's time to travel to whichever tech hub the investor's based. But yeah, I think it'll be one where we will start to harness the power of communities, whether that's like online, like what Founders Network does, and also even further afield from the UK, sort of like the stuff that we're starting to do, like with the US based VCs and key players out there, to sort of get them to share their knowledge. So I think the online stuff will be really good for like getting knowledge and the peer learning perspective, but I do think that there will still be a place for the face-to-face, even if it is just because we're all fed up of Zoom more than anything.
And Rachel, what are your thoughts on that? I mean, do you think that you're going to change the way that you share knowledge between yourself and maybe other startups, or trying to access investors on a permanent basis, or do you think things will slowly creep back to normal?
I think, as Lauren says, it's up to us, right, to do the right thing. And I think it's true of the work situation, it's true of the investment situation, it's true of life, right? We've got to take the best bits of what we've learned over this crazy year and try and keep those things, whether it's the family time, whether it's your pets, or whether it is, the way you deal with your team and your wider network. As a business, because we've always had kind of a few different locations, we're quite used to working virtually and sharing knowledge, and obviously we're always more willing to attend online events before. But absolutely, as Lauren says, it's working, so let's not break it just because we can go back to meeting face to face. However, I think you're absolutely right, James, with the question. There will be a rebalancing again. It won't be to this extreme that it is now, and there will be a rebalancing, and it will just be a case of us as a business navigating that and making sure that we are spending time in the networks that are valuable to us.
Another good audience question, which I think is a great point and something which none of us have mentioned yet, and it's about the role of universities. The question is, what role do you see for regional universities, e.g. in creating startups and helping them spin out outside of the famous golden triangle of Oxford, Cambridge, London? So maybe I could go to you first, Rahala. Do you find universities are important for your investment activities?
Definitely, that's the case. I mean, we've invested in quite a number of university spin-outs over the past few years. And obviously, universities are places where also there's quite a lot of IP that can sort of be commercialized now available at universities. So I think, yes, the universities do play a key part. I think that's something quite new for universities. You know, it's only been in the past few years where universities have kind of started to really think about strategizing how they can spin out startups from the sort of the projects that they've had internally. And one thing that we see is that there's definitely need to be a little bit more focus in utilizing internal resources, because university has access to so much resources that other places don't, you know, accelerators, incubators. Nobody has as much access to sort of, if let's say you're a life science company, the access to labs, access to professionals, all the professors, all the students that are learning, studying at the university. So there's quite a lot of potential within each university to help and sort of spin out companies. And that's something that we're seeing more and more. As I said, we've invested in quite a few spin outs. We're actually in the process of investing in a couple of spin outs in the next few weeks. So definitely, yes, there is a good opportunity, but I think there's quite a bit more that universities can do to sort of increase the quality or give a better chance to companies that they're spinning out.
Thanks very much. And to the person who asked that question, I mean, as you say, the Oxford, Cambridge and London are, of course, the universities that are most famous for their spin-outs. But I did see some interesting research recently which said Queen's University Belfast, pound for pound, was the best spin-out university in the UK. So there's obviously interesting things going on outside of the Golden Triangle. Sue, what are your thoughts here? And does the British Business Bank try and work with regional universities to try and access the kind of promising IP that Rahala was describing there?
Yeah, we do. And I know my Northern Paros fund managers have a very strong relationship with the universities. But again, we can always do more. There's a lot of activity around Manchester and Lancaster. One of our startup businesses that we've supported through a previous Northwest Fund and now Northern Powerhouse, and has also gone on to raise funding, was sort of a spin out from Lancaster, which is Relative Insight. And it's interesting because even before the pandemic, they decided they wanted to stay in Lancaster. And I think they had a lot of pressure of sort of, you need to be in Manchester. And I think this whole new world has actually shown, well, actually, you can be anywhere now. And they've got now sites, they just opened a site in New York and Boston. So, you know, it just shows that it's definitely worth having the relationships with the universities, but it goes back to the educational piece as well, working with the universities to let them understand where the finance is.
And another good audience question that's on a kind of slightly similar theme to something we were discussing earlier. And the question is, do you think that lower barriers to entry as more work happens remotely could in fact be detrimental to startups in the regions in the long run, if investors that were previously UK focused find it easier to look further afield to European tech hubs, for example? So I suppose what the point that the person's making there is the risk is that things become so competitive that regional startups actually find it more difficult to raise finance. So staying with you, do you think that's a threat?
Well, yeah, definitely a threat, yes, as we can demonstrate that it is easy to now to do business anywhere without moving from your chair. So yes, it could potentially be a threat. But again, I think it comes back to making sure that we're very vocal and we raise awareness of what we can do alongside other investors, and make it easy for the entrepreneur to understand the potential finance options that they have. I think it is, you know, it's something you have to continue to do it. You can't just do it 1 month and then think everyone knows about it. It's a continual, you know, educational program, really, finance. It changes all the time. And it's for us, I think, to ensure that entrepreneurs understand where's the best place to go. But yeah, obviously, you know, with lots of other things apart from investment, there's potential opportunities for lots of things to change going forward due to being able to do business like this.
And Lauren, do you have any thoughts on that at all? I mean, the kind of entrepreneurs that you're talking to, do they think of themselves as competing regionally or in the UK or indeed internationally? Are they expecting to have to pitch against international companies increasingly?
That is a good question. I suppose on that, what on the flip side is that if we have to be more sort of aware of a risk of, say, funding going more, say, into like European companies or like US based or in Asia, but also that opens the playing field for UK companies to get access to overseas funds as well. So that's widening the pond in terms of finance that's available. What I always say to our members is that basically you're not just competing with people in your region, you're competing with every other deck that investor sees in that day. So you just need to make sure that your deck is, it's on point, it captures their attention, and because you're competing with not just, like I say, the people in your region or even just the people in the UK, it's everybody. And if you can make it that your startup really captures that attention and you've got the metrics that are on point, and even if it's a case of sort of like going slow in order to then go fast, and actually making sure you're starting to get your product market fit, and then you've got the metrics to back it up, that is going to put you in such a much better position. And obviously even from sort of like a cap table thing, like you're going to be able to negotiate a lot better as well. So if you can just make sure that you focus sort of on yourself and make sure that your startup is in the best position that it can possibly be, you kind of like eliminate a lot of those risks anyway, because you are like what the investors are looking for basically.
And it's, I guess, following up on that advice theme, Rahala, you guys have maintained your deal flow throughout the lockdown. Could you give us a little bit of insight into the differences in your approach as an investment when you're looking at a prospective investment that you haven't actually met before? How does that compare to investing in a company that you have met? And have you got any advice for entrepreneurs who are having to pitch completely virtually into how they can get seen and heard effectively?
Yeah, just before that, can I just make a comment on the previous question?
Absolutely.
In terms of the sort of the threat that's facing early stage companies, we do have to bear in mind that in the UK, the biggest driver of early stage investment is SEIS and EIS. That's the biggest factor that's encouraging or motivating early stage investors to invest. So in that sense, it will not be a threat, because even if they're an international company, they do need to come into the UK. You need to have UK presence in that sense. So I don't think the competition is going to change. At the later stages, the competition has always been there. So later stage VCs, they're always looking for great opportunities to deploy their capital, whether it's in the UK, France, Germany, or across the pond in the US. So I think what Lauren mentioned is really good sort of point, that you're still in competition. You have to think that, you're not just competition with your cohort or with people in your region, you're in competition with thousands of other startups in the UK who are seeking funding for this limited amount of money that's available. So yeah, I just wanted to make that point. But going on to your second question in terms of the sort of how the companies should approach, as I mentioned earlier, yes, in terms of our approach at SFC, because we were doing so many deals throughout the year, as I said, we did have a sort of a streamlined process from the first meeting all the way to sort of due diligence and the sort of the legal documentation. Everybody has their own roles and the sort of the step that everybody comes in. So on our side, it's actually been sort of seamless in terms of like running it through. But I think there's added pressure on the founders, although that we discussed that now the geographical sort of bias has been taken out. Now there's going to be a bit more pressure on the companies to sort of communicate well, build that relationship virtually. So whether that's, through the communication, every email that you send is going to get analyzed, the way you send it, how you respond to the questions, if there are some comments raised, if you've asked to update something, like I was part of the due diligence, the fact that your sort of investors are looking for a reliable person. This is what you have to bear in mind. So now that you're not meeting face to face, you have to think every action you do how does that translate into sort of building that relationship with with the investors. So I think, yes, it's a bit more challenging now for companies to do so, but they really need to be more prepared for this sort of the whole virtual setting, do your research on the investors beforehand, prepare your due diligence in advance. It doesn't look good if you, for example, go for funding, you ask to do the due diligence and it takes you a few weeks to complete the due diligence. That just doesn't look professional, So similar things that it was there before the pandemic, all the things that founders needed to do to sort of build that relation and get the investment, but now it's a bit more difficult because it's through video calls rather than face-to-face meetings. But yeah, it's still doable and really great sort of experience.
Thank you. And we've managed to get quite a long way into our discussion without any of us mentioning the B word, which is quite impressive. The other big change, of course, that's coming up is that although we've already left the European Union, the transition agreement is about to end, and that presumably is going to have some quite big implications for the UK economy in the long term. Sue, do you think that that Brexit is going to affect companies' ability to raise finance? Because of course European funds were actually quite important in helping funds flow to the regions, weren't they?
Yeah, and you know, we've had a commitment from government that some of the funds that we currently administer, for example, Northern Powerhouse, we've got a further commitment of 100 million. So we're constantly working, you know, on ways to ensure that there is still a flow of finance, and coming up with new programs in different sectors as well. So we're sort of watching and waiting and seeing and being there really to sort of hopefully direct people to the right type of finance if needed. It's interesting because when you speak to a lot of businesses at the moment, you know, from a BBB point of view, before COVID, we were working with about 93,000 businesses delivering £9 billion worth of finance, and during COVID that's gone up to £63 billion, supporting 1.5 million businesses. And when you ask them now, you mentioned the B word, they sort of look at you as though, listen, Sue, if we can get through COVID, Brexit will not be an issue. But obviously, you know, I don't think that's totally true, but I think there's so much focus and headspace that's taken up from the current pandemic. It's one of them, let's see what we can do afterwards. And the bank is already looking at new ways of supporting when the government-backed schemes finish in 2021.
And Rachel, is Brexit on your radar at all? Does it affect anything that you're doing? Have you made any preparations?
Yes. We are actually participating at the moment in a European-backed scheme, which allows us to get some free innovation consulting, funded innovation consulting, and we're actually looking to work on that through January. So when we signed up for it, obviously we would have been remiss to sign up to the agreements and all the NDAs without asking the B question. But we've been reassured that the funding will still be backed by part of the Development Bank of Wales. So it can still happen. And I think, as Sue said, the investment sector is looking at ways that they can fill gaps, redistribute resources. You know, the government's recent announcement in November about supporting businesses, there's still funding there. So yeah, while the guardrails and how to access things may change, we, again, as Sue said, we're not as worried as we perhaps were 12 months ago. As it gets closer, things aren't showing signs of slowing down.
Yeah, and a lot of the schemes don't finish, you know, in January. A lot of the funded programmes that we deliver and the one you're accessing, Rachel, are here till sort of the end of 2021. So we have got time, you know, to sort of look at other options going forward.
And Lauren, have you got any thoughts on that? I mean, what's the mood among the entrepreneurs you're speaking to with regards to Brexit? Are people worried about it?
Yeah, I mean, there's always that underlying sort of factor in the sense as well, I think, of with a deal still sort of on the table and obviously nothing's sort of set in stone, there's always that uncertainty. I think obviously because the entrepreneurs I tend to deal with are still very much at the early stage, so mainly pre-Series A companies, their main focus has actually been on COVID. So touch wood, we haven't had much of, like you say, the B word conversations going on. I have a feeling probably in the next couple of weeks we will, as we get close to the 31st. But yeah, their main focus has actually been on sort of the survival, or even like the thriving during COVID, because we've had, you know, companies who have in effect have the equivalent of, like, say, 3 years of growth in 9 months, just because suddenly their product or service is, you know, obviously being in demand. I mean, Hopin's a great example, right? It basically went from like 0 to sort of Series B in the space of like 9 months, which is like unheard of. So yeah, that's probably the answer. That is not the answer you're looking for, but it's the answer I have to give, unfortunately, is that we've probably not focused on Brexit as much in Founders Network as we have COVID, but I imagine sort of in a couple of weeks, and then obviously the beginning of next quarter, it will be at the forefront of everyone's minds and how they're going to deal with it.
That makes sense. And could we have our final poll question now? Kind of a good time to ask it, given we've just been talking about Brexit, and we still don't know whether we've got a deal or not, but the government's telling companies to prepare. Is the government doing enough to support regional startups, do you think? Yes or no? I think in a moment we're going to ask our first question as well, because we're going to be very interested to see if people's opinion has changed as to whether there's a rebalancing going on. So is the government doing enough to support regional startups? And the results are, so 6 in 10 say no, the government isn't doing enough. Which is interesting. I should probably start with you, Sue, shouldn't I, given that you're the state-owned agency who's largely tasked with this. What's your reaction to that, and what more should you be doing?
Yeah, and you know, again, I think it's a case of, again, understanding what is out there. So what I came back to earlier, I mean, if I look at our startup loans programme, which is government backed, we've invested just under £650 million into startups in the last few years, into 78,000 startups. And just in the Northwest my patch alone, we've done 10,000 business startups, you know, £90 million. So there is finance available. It's understanding where it is, as I've said previously. So I think the government has done quite a lot. And again, if I touch on bounce back loans and CBILS, that there is a lot of support going out to businesses at the moment. We can always do more, and we're always looking at trying to look at new interventions. That's what we want to do, and that's why we launched new programmes. And it's good to see that government have just announced another you know, funding allocation to startup loans to do 11,000 more startups, because we are seeing in the last 9 months a big rise in new startups, you know, of people coming out of work or changing career direction. So personally, I'm biased. I do think we are doing a lot, but it comes down to knowing what's available.
And Rahala, what are your thoughts on that? Is there anything you'd like to see from government to promote regional startups? And also just wanted to quickly ask a supplemental question to that as well. You mentioned EIS and SEIS earlier. The Chancellor is under a lot of pressure to increase tax intake, and maybe one way of doing that is tackling tax incentives. Are you worried at all that EIS or SEIS could be curtailed?
Yes, and what you mentioned, obviously, yeah, this is, again, SES and EIS are part of the initiatives government have put in place to encourage investment in early stage companies. I think we can clearly see that those measures have worked. You know, that's the reason why UK is the #1 sort of investment hub across Europe. You know, it's because by incentivizing, you know, the way they've done in terms of like incentivizing investors to invest in high risk businesses. You know, we have to bear in mind that most early stage companies do fail. And that's why these sort of incentives are there to encourage investors to do take up on that risk and fund these companies. So I think firstly, SCS and EIS, I think they are really great in terms of encouraging investments. And also, you know, as Sue mentioned, I think there's plenty of support available by the government, you know, through British Business Bank. You know, as Sue mentioned, like we're now partnered in the sort of the Regional Angels program. You know, that's quite a lot of money that we have now to encourage angels to invest in regional companies, you know, to encourage investments there. And I know there are quite a lot of other programs there available as well. So I think it really boils down to sort of the education piece that Sue mentioned. I think there's lots of opportunities available, you know, whether it's not only on the government side of things, even if you want to go down the sort of the angel investment and private investors, I think there are a lot of options available for companies, but there are very little sort of hubs where people can go and sort of get all that information. You know, it's more of you have to get it through introduction. Someone needs to tell you that this is available. So I think there needs to be a little bit more clarity on the options available and better communication. But obviously there's always more that everybody thinks governments can do to support businesses. But I think so far they've done quite a good job, but needs a bit more communication.
Okay, that makes sense. We're almost drawing towards the end of our time. It's been suggested to me, and I think it's a good suggestion, we should bring our first poll up again, because we've been hearing a lot of positive noises, I suppose, about rebalancing, and that it's actually getting easier for entrepreneurs outside London and the Southeast to meet investors and pitch their businesses. So could we bring the first poll question up again? That was, do you think investors are more willing to meet regional entrepreneurs than before? Which is sort of intrigued to see if the balance has changed at all based on the discussion. I think earlier on the balance was 79% said yes and 21% said no. So it's going to be interesting to see if that balance has changed at all. Oh, look, you've been very successful, guys, in terms of getting that message across. So that's very encouraging. 9 out of 10 now think that it's an improved position for regional founders. So that's fantastic. We're almost out of time, but I thought before we closed up, it'd be good to get a brief final closing thought from each of you. What do you think needs to happen to at least maintain, but I guess ideally build upon increased investor interest in startups outside of London? Rahala, why don't we start with you?
Yeah, I think as mentioned before as well, I think it's time for the whole ecosystem as a whole to take a look at what really worked and what didn't during the pandemic. And I think there's a lot of positives in terms of like everything that was mentioned during the webinar today, you know, in terms of having access to these startups, the startups having access to investors. So I think we really need to build up on that. For investors, I think the objective is simple. You know, investors want to invest, you know, find the right company. They want access to deal flow so that they can invest in companies. And I think the bulk of work is going to be on the sort of the ecosystem as a whole to sort of facilitate that, you know, as they've done during the pandemic. And obviously it's shown clear success. You know, the number of investment haven't really dipped during the pandemic. So clearly something is working. So we need to find what it is and sort of continue on that.
Mm-hmm. Rachel?
Yeah, I agree. I think everything has been said really, and you know, we still need to do our homework and make sure that we as founders and entrepreneurs are accessing and starting the conversations that are going to be most relevant for us. It's not that, okay, the playing field has perhaps leveled a bit, so go anywhere you like. You know, you still will need to be making sure you're having relevant conversations so that you're not wasting people's time, and that can only really be brought about with more education and more availability of understanding the investment available from London, the investment available from the region that a business bases themselves in, but also from other regions, because there's a lot of inward investment between regions as well. So it's not just that you're restricted to your own region plus London. You know, there's a whole game to play.
Mm-hmm. Sue?
Yeah, I would echo what everyone said. I think if you're not sure where to go, then ask. There's lots of assistance available. We're just in the process of launching a finance hub to try and address this sort of educational piece around finance. You know, network, there's ideal opportunities as we've seen today. It's just about understanding what's available. But I do always say to any entrepreneur, if someone does say, I will invest in you, then shop around, because you've obviously got something good and it's worth speaking to others as well. So if you are raising finance, then I always think it's worth speaking to other investors at the same time.
And a final thought from you as well, Lauren.
I suppose in the short term, take advantage of the opportunities that COVID has afforded us, in the sense of, as you've heard from like the panel, you can get those, especially those introduction calls started with VCs from anywhere in the UK or even in the world. And then I think the other thing is just really double down on your business and make sure it is in as great health as it possibly can be at this point in time. You know, go out to your customers, really hone in on their sort of customer needs, so you are starting to produce the metrics that are really going to make you desirable to investors, and then that's when you will be able to go out and get the funding that you need, and also the funding that you want, and it's to your terms.
Excellent, thank you. Well, we're just about out of time, so thank you so much to all of our excellent panelists, and of course to our hosts, SFC Capital, for bringing everyone together this afternoon. Thank you all for joining us too. I hope you found it useful, and certainly thanks for the excellent questions that you asked as well. The full recording, as well as the results of the polls, will be shared with you all soon, along with contact details in case you want to keep the conversation going. I'd certainly like to hear from you. And enjoy the rest of your afternoon, everyone, and thank you all once again.
Thank you very much.
Thank you. Bye.
Thanks, everyone.
Yes.